Develop success from failures. Discouragement and failure are two of the surest stepping stones to success. Dale Carnegie. And of course, Dale, Mr. Positive Thinking, is exactly right. We can expect to fail. As Miyamoto Musashi says, of course it's hard at the beginning. Everything is hard at the beginning. And we keep pushing through. Because think about it, folks, all we have to do in the end is determine whether price is going up or down. It's a binary decision. This is not rocket science. We are using things like the price percent oscillator, the derivative oscillator, trend lines, Heikin Ashi candlesticks, Bollinger Bands to all blend together in the 3 time frames we use and help us see accurately where price is going. That's what we practice every single day. And the more you practice, the better you're going to get at this. Now, I don't want you to spend more than 10 to 15 minutes a day. That's all it takes, but you have to spend it every day, day in and day out. We are in a tough month. The month of October, as I've been saying all month, is the month where all the big crashes have occurred. And of course, it's an antsy month because of that and all the stuff going on in the country with talk of impeachment, everything going on around the world, Brexit, all of those things are making the markets quite shaky. That's fine. That will sort itself out. In the meantime, we're going to follow these charts. We're going to trade where we can, practice trade where we can, take virtual profits where we can, and where we can't, we just let it go. I want to encourage you to follow these markets with us every single day. If you've got certain stocks that you enjoy, that you are interested in, maybe you're in a business in one of those areas, maybe you've got a sector, the economy, you want to look at an ETF sector fund, again, try tracking those things too. Practice 10 to 15 minutes a day is all we ask. Fill out your trade worksheets whenever you do a practice trade, daily market worksheets on a daily basis if you have the time to do that, and at least the weekly market worksheet once a week. You got to do the weekly market worksheets at a minimum and the trade worksheets. Why? Because the trade worksheets are going to show you what you learned and didn't learn during that trade, the mistakes you made, why things did not work. If you don't write it down, it's like it didn't happen. You can't go back and use it. And what you're going to build with all these trade worksheets is your own little trader diary that's going to help you going forward. You can look back at that for certain times of the year. How did the S&P trade last year and the year before in the fall? What was October like back in 2019, 2 or 3 years from now? So that kind of stuff is important. Stay with us every day, 10 to 15 minutes. That's all we ask. We see stocks are down for the day. Bonds and gold are up. Let's jump, as we always do, first into the S&P 500. That's the Spiders S&P 500 Series Trust Exchange Traded Fund. And we see that we're going into the second week of up movement. Still don't have a crossover on the price percent oscillator going up. Derivative oscillators going into its second week of up movement. We've pushed through that prior weekly trend line. We actually did that over the course of this last week. We go to the 2-day chart, which is completed drawing, and we see on the 2-day chart a decent up movement of the 2-day candles. Price percent oscillator crossed over going up back on Friday the 18th of October. And the next candle, we saw the green derivative oscillator crossover in the same direction. Didn't happen at the same time, but is heading up. 4-hour chart is up in the morning and then a bit of a pullback in the afternoon. Like we said, down 0.33%. May see that 4-hour chart crossover going down. Derivative oscillator popped up in the morning, then lost energy in the afternoon. Don't have a trade on the S&P. Why? The weekly is down, the 2-day is up. We've got to wait for stocks to sort themselves out. Remember, we trend follow, and the main trend that we use is the weekly trend. And it is still in a confirmed down move. When the 2-day's moving in the opposite direction, our intermediate chart, we don't trade. Why? Because it's too dangerous. We want to find a clean and concise trend. And when you look back on our weekly chart, you can see back over time how accurate and great it has been for great clean moves. And when it starts getting antsy and weird and things aren't moving in the right direction, 2-day charts in the wrong direction, then what do? You keep your powder dry and you wait and you are patient and you do what the charts tell you to do. Now we're going on to the NASDAQ 100. Those are the tech stocks. They haven't crossed over either. Derivative oscillator going into its second week of green. We see that the price percent oscillator still negative. We have our third up candle that appears to be forming, and we'll continue to keep our eye on that. We go from the weekly to the 2-day. 2-day chart crossed over back on the 16th. That was Wednesday of last week. That represents Tuesday and Wednesday. It's a 2-day chart. We see this latest 2-day chart is a bit of a slowdown. It's still an open box candle, but when we have an open box red, doesn't mean down movement. It means a slackening in the up movement. It's cautionary. Price percent oscillator still heading up. Derivative oscillator gaining upward momentum. We go to the 4-hour chart. What do we see there? We see strong up movement in the morning and then a pullback in the afternoon. We'd sort of laminated that 4-hour chart for the last 2.5 days. It pulled away in the afternoon decidedly, and we see that price is moving through the 2-day trend line. Derivative oscillator has been negative since we had that lamination back in the afternoon on Friday the 18th. Now again, what does that crossover on the 4-hour chart mean to us? Well, we still have the weekly in a confirmed down move. We still have the 2-day chart in a confirmed up move. So we're just waiting for things to sort out. Is the 4-hour chart going to be strong enough to pull that 2-day chart over? And then we have an opportunity for jumping into a down move? Maybe. Maybe not. Maybe the opposite will happen. We're going to wait and let the charts lead us in the right direction. Back to the weekly chart, on to bonds. Bonds have gone into the second week of down movement. Price percent oscillator still heading down. Now bonds are up for the day 0.58%. We'll get to that in a minute. Derivative oscillator still gaining downward momentum. Still a good strong candle drawing 2 days into this 5-day candle. We go to the 2-day chart. And we see nice stair steps heading down. The price percent oscillator continuing to head down. Derivative oscillator gaining downward momentum. We look at the 4-hour chart, and this is where we see things bouncing off a bottom up in the morning, and then a bit of a pullback in the afternoon. A red open box candle spinning top again, cautionary for continued up movement. Didn't have enough energy to cross over going up. Derivative oscillator still losing momentum, has been losing momentum for the last day and a half. So we'll wait and see what there is to see there. If you are in this nice, strong down move, since we had things cross over all the way back on Wednesday, the 9th of October, jumping in point somewhere around that 144 mark. And we have seen things go down quite substantially, all the way down to a low in the low 138s. So again, not saying you have to get out. Never said you had to get out back when things hit this last bottom. Is it going to start moving back up, or is it just settling out again for more down moves? Don't know. However, are getting close to a 4-hour crossover. Never a problem. Ever a problem, my friends, to take profit. So keep your eye on things. Use any kind of triggers that you think are appropriate based on your past practice. If that 4-hour chart rotates over going up, yes, you can use that. If it penetrates the 2-day trend line, yes, you can use that. But again, remember, when you enter a trade, what you go to after that looking at that 4-hour chart, your real controlling charts are your intermediate and your long term. And the long term and the intermediate are still looking quite decent. So keep that in mind as you start making decisions if you're in that practice trade, and I sure hope you are, and I sure hope you've been keeping great notes on it. Gold up for the day, 0.29%. What do we see going on? Well, we have a green spinning top at this, not an open box. Again, it's a cautionary candle. It is not a green open box candle. It's a closed candle. What does that mean for us? Again, it means cautionary for continued down movement. We do see that it does have a wick on the bottom. It's hard to see if there's a wick on top. I don't think there is, but it's showing reduction in that down movement. Price percent oscillator still heading down at the same angle. Derivative oscillator gaining downward momentum. Like we said, gold up a little bit for the day, 0.29%. Look at the 2-day chart, and we've really seen where gold sort of hit around 140 and sort of hung there. It's at 140. See, it closed the day at 140.20, so it right around there. Derivative oscillators losing downward momentum on the 2-day chart. Price percent oscillator still heading down. These candles are a bit squirrely. Has gold reached a bottom, getting ready for some up move? Don't know at this point, but we do have the 2-day and the weekly still in confirmed down moves. What do we see on that 4-hour chart? Crossed over going down. And again, we saw crossed over going down actually in the afternoon on Monday. And then we see a green spinning top, solid candle, and then almost a doji there in the afternoon. Indecision at both times. Tending up, derivative oscillator lost some momentum, downward momentum at the end of the day. And we see that the price percent oscillator looks like it could be getting close to crossing over, going back up again. So we'll see how gold sorts itself out as we continue to move through this week. Folks, remember, the price is well below the 2-day and the weekly trend lines at this point. And again, keep your focus on that intermediate and long-term chart. That's where we are, folks. As we end the day on Tuesday, go into Wednesday. Remember what we do on Wednesday? We call that back-off day. That's the day where after we do our chart review, we step back, clear our minds, look at that weekly chart on all of our ETFs and see what is the weekly chart actually saying to me. Remember, that's the biggest trend we typically follow, and it is extremely important to know where that trend is going because all things being equal, the market always tends to move, the market tends to move in the direction of the largest chart. If you hadn't purchased our book, 13th Printing, we have an autographed copy for you. We'll be happy to send to you. Follow the link in the show notes. If you're not a Patreon supporter and want to support the work that we do here at the channel, we've got lots of special, great trainings for you. Depending on your level, you can get a free book. Check out the Patreon link. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.